This is a demonstration of problem 23-1B, Statement of Cash Flows using the indirect method. The following are Sanibel Corporation's comparative balance sheet accounts at December 31st, 2020 and 2019, with a column showing the increase or decrease from 2019 to 2020. The problem also provides us with additional information that we'll need to be able to complete the statement of cash flows. In number 1, it states that on December 31st, 2019, Sanibel acquired 25% of Island Company's common stock for $420,000. On that date, the carrying value of Island's assets and liabilities, which approximated their fair values, was $1,680,000. Island reported income of $220,000 for the year ended December 31st, 2020, and no dividend was paid on Island's common stock during the year. So we know that when we own 25% or more of an investee's common stock, we are required to use the equity method. The equity method requires that we record as investment income our percentage ownership in the investee's net income. So Island reported $220,000 of net income. We own 25% of their stock. That means that we would have reported on our income statement $55,000 of investment income, and that is non-cash. We did not receive any dividends from Island this year. So when we see on our comparative balance sheet that the investment account increased by $55,000, we're going to know that $55,000 was from the recording of the investment income, and we'll have to adjust net income to subtract that. Number 2 states that during 2019, Sanibel loaned $500,000 to another company that was unrelated, and the company made the first semi-annual principal payment of $50,000 plus interest at 10% on December 31st of 19, and they're current on the loan as of December 31st of 2020. So when we look at the loan receivable account, we see that it did decrease by the $100,000 total payment. Those were both cash amounts, so those are fine. We will include those as proceeds of cash in the investing section. Number 3 states that on January 2nd, Sanibel sold equipment costing $100,000 with a carrying amount of $31,000 for $20,000 cash. So the first thing we note is that there was a loss on the sale of this equipment because the carrying amount was $31,000 and we only received $20,000, so that means there is an $11,000 non-cash loss that would have reduced net income, so that will have to be added back in the operating activities section. The other thing that we would need to determine is the amount of depreciation on this equipment, because we're going to have to adjust both the equipment account and the depreciation account for the amounts that we removed. If the cost of the equipment was $100,000 and it had a carrying amount of $31,000, we can determine that the depreciation, accumulated depreciation on the equipment was $69,000. So on our comparative balance sheet, when we have a sale of equipment like this, we're going to have to add that back to the change in the equipment account, because remember, when we sell equipment, we would have credited property, plant, and equipment for that $100,000. And we're going to have to get back to the amount that we actually paid cash for. So that's going to have to be adjusted as an addition. And also we would have removed that accumulated depreciation of $69,000. So that will also have to be added back so that we can get to the actual amount of depreciation expense that was deducted on the income statement. So these are necessary adjustments that you always have to make whenever there is some type of a sale of equipment or any type of investment, because these entries would have been made and they do affect our ability to determine how much we actually spent in cash or recorded as depreciation expense. The next item states that on December 31st, 2020, Sanibel entered into a capital lease for a new factory. The present value of the annual rental payments is $850,000, which equals the fair value of the building, and Sanibel made the first rental payment of $120,000 when due on January 2nd, 2021. So this is an example of a non-cash financing and investing activity, because we entered into a capital lease for a new factory. So our property, plant, and equipment would have increased by $850,000, and the lease payable would have increased by $850,000, but no cash was exchanged. So when we have a non-cash item, we'll have to list that under non-cash financing and investing activities, but we also have to make an adjustment. We see that property, plant, and equipment increased by $917,000, so even making the adjustment for the sale of the equipment, it still appears that we spent quite a bit of cash on property, plant, and equipment, but actually that wasn't the case, because $850,000 of this came from entering into a capital lease. So we need to subtract that amount so that we can determine the actual amount of property, plant, and equipment that we paid for with cash, which was $167,000. And we also need to show that as an adjustment to the capital lease obligation below. We did not get cash of $850,000, so we need to show that. And we will list that as a non-cash investing and financing activity. The next thing they give us is net income. So we don't have an income statement, but we really don't need it. We're given the information on net income. The next item is information on the declaration and payment of dividends. So Sanibel declared and paid cash dividends for 2020 and 19 as follows. It's important to look at these dates, because we have to remember that retained earnings is debited when dividends are declared, but we're interested in the dividends that were actually paid in 2020. So if you notice, the dividends that were declared for 19 were declared in 19, but they weren't paid until February 28th of 2020. So these are the dividends that we would actually need to subtract or show in the statement of cash flows, because these are the ones that were paid in 2020. The 2020 dividends that were declared this year, $100,000, will not be paid until 2021. And the instructions are telling us to prepare a statement of cash flows for Sanibel Corporation for the year ended December 31st, 2020. So it's important that you note which dividends you're going to be subtracting based on the ones that were actually paid this year. You would also be able to figure that out if you looked at the dividends payable account and you notice that dividends were $60,000 and then they've increased to $100,000. So that means that we really the increase was $40,000, so we haven't paid these dividends yet for 2020. So we have the information that we need to be able to do the statement of cash flows. We've made the appropriate adjustments to our accounts so that we should be able to complete the statement of cash flows with the information we have. We'll start out with net income that we were given in the problem of $285,000. We have the correct amount of depreciation expense now that was included in the income statement, which was $159,000. That's non-cash, so it needs to be added back. We had determined that there was a loss on the sale of the equipment for $11,000 that will also have to be added back. And we had that investment income in Island Company using the equity method of $55,000 that would have to be subtracted because it's non-cash. So those are the three non-cash items that were included in net income. Now we're going to make the reconciliation entries for the current assets and liabilities. The accounts receivable increased by $170,000, so that would be subtracted. The inventory also increased by $168,000, so that would be a subtraction from cash. Accounts payable increased by $170,000, so that would be an addition to cash. And income taxes payable also increased by $15,000, so that would be an increase. So we have our total for our reconciliation, our adjustments to reconcile net income to net cash provided by operating activities of a negative $38,000 that would be subtracted from net income of $285,000 to give us net cash provided by operating activities of $247,000. Next, we're going to record our cash flows from investing activities. If you remember, we sold equipment for $20,000. We also received cash from that repayment of that loan of $100,000, and we had purchases of property, plant, and equipment that we calculated to be $167,000. So we have net cash used by investing activities of $47,000. Our cash flows from financing activities included the payment of the cash dividend of $60,000 that we determined from the information. So that gives us a net increase in cash of $140,000 that does match the increase from 2019 to 2020. And then we add our beginning cash, which was $510,000. And that gives us a cash balance at the end of December 31st, 2020 of $650,000, and that does reconcile to the balance sheet. And the last thing that we need to record is the non-cash financing and investing activity, which was the issuance of the capital lease for the property, plant, and equipment of $850,000. And that is the conclusion of the demonstration for problem 23-1B.